Good afternoon, Ken at Tortoise Capital. This is the speed run on the swing portfolio for September 8th, 2020. We're going to go in sequence of best to worst. For the day, we have the S&P basically, where are we at here? Down 2.7% today. So starting with the big winners. Nikola, we had framed the breakout trades with the yellow boxes. So we had a gap up higher than the PSAR. It offered a 20% gain intraday and overall 40%. This is another one that we will play for a follow through tomorrow with a bracket like that, but that offered an intraday gain. Virgin Galactic. Here's Virgin Galactic with a beautiful breakout from our box in an orderly fashion. This was the trade idea right here, where it breaks out from the daily box, and then you can play 1, 2, 3, 4 legs to the top in the usual way. Straightforward win for over a 10% gain from the initial entries. Nothing wrong with that. Treasury started well. We weren't trading that one today. We wanted to see how the trade shaped out, but it held support above the skin of the dragon, or above the spine of the dragon. I think we're going to see that one go. Wheat and Precious, nice defensive play, gap down, and then gave an intraday trade to the upside back into the yellow zone. Caterpillar, one of the few to hold its level. It gave a trade opportunity on the breakdown. Long gains to the upside and then retreat back into the yellow zone. So again, 1 day trade at a time. Bill Ackman's hedge fund turned in a little fractional gain and recovered nicely. I think that's a keeper going forward. Home Depot resisted the sell-off better than most. There was a morning hook opportunity, and we're going to see that repeatedly, but it's back in the yellow zone. That's favorable. Simon Property Group held its level pretty well. Defensive play. Japan, defensive play at minus 0.8. Lost much less than the other big fat indices. Alcoa, still in the red. Silver, stable defensive play. We'll see tomorrow if that's really going to move or not. Wheaton doing well when silver was underperforming, so that's actually a good sign for Wheaton. Consumer discretionary lost less than the market, but certainly if it breaks below the Bollinger Band mean, we could be short. That was discretionary. This is healthcare, just cratered. So this is another breakdown for tomorrow. Just closed as poorly as could be. Emerging markets, minus 1.74, ready to break down. Everything's ready to break down tomorrow. Materials, poor. Russell was the best of the U.S. indices, but even so, that fell out of the Z1 river altogether. Cisco broke down, recovered, but then broke down again, so a wild ride. Clean energy actually stabilized inside Friday's big trading range. But I think that's ready to play a tight breakout in either direction. It's very liquid, and we're ready to go in either direction on that one. Mexico. Easy sell-off, and it's working its way downward. Yellow zone is the expected target for this sell-off, so I'll be ready to go on this one even further down tomorrow. The VIX, you would have thought it would have done better today, but a big gap up and then sold off sharply. So this feels more like this could have been a 1 day sell-off. It took the market to minus 8%. Dow closed poorly. This was just a perfectly organized downward slide all day today. You had multiple opportunities to play like this Z3 pinch breakdown and collapsing dragons, reinforcing when it breaks the VWAP in a nice orderly recovery. Perfect for trading. Even on the way up with the supported spring crossing, gives you some upside. And you had some waves that were tradable in the futures here, but the big breakdown from the gap down opening and then the collapse here reinforced at the VWAP, perfect intraday. Intel closed very poorly. That's ready to collapse further. High priority on tech short. Here's finance was a great big sell-off and a slide all day. And again, these midday recoveries that collapse out of the Z3P, there's your short. There's the reinforcing when it crosses the VWAP to the downside in an orderly exit there. Here's your supported supported spring crossing with a second position here when it breaks across the VWAP. So beautiful intraday trading today. Now we're getting worse than the S&P. We're just going to look at the dailies. Weakness in Brazil. I think we'll be ready short below 30. Nucor, horrible slide, weak finish. Walmart, just terrible. And so instantly short, second position if it hits the PSAR and goes through. Energy, bad sector, getting worse. Google and all of the other, now we're going to go through a series of all the big tech leaders. They violently voted downward today. There's Google. There's Facebook selling off and closing poorly. Even Twitter got smashed. Amazon. Now Amazon's actually in better shape because it held just above Friday's low. So I actually think this is one that you could play in that direction and say, look, you're going to buy the retail winner on sale. You loved it at 3,500, so you should love it at 3,100. I think that's going to be a raging buy tomorrow. Tech, the broad sector down 4.5%, closed poorly. Salesforce also closing poorly. Welcome to the Dow. U.S. Steel down 5 1/3 and has broken below this big consolidation zone. Next target Z2, then Z3. Not good. Microsoft, wow. Couldn't close any worse than that. So I think I'm ready to buy the breakout in either direction. That's either going to be a big, strong recovery back to the Bollinger Band mean or a collapse down here to the support at about 194. NVIDIA chip leader on sale. I'm liking this. Nice strong support. If it breaks below that, then you're short, but otherwise you got a great opportunity to buy it at 469 on a stock that was at 600. Oil exploration, horrible, getting worse. Win, no joy in Mudville. It's at the Bollinger Band mean it's going to collapse and we'll come back into this yellow zone. So there's about a $10 move to the downside that's baked into the cake. That's minus 12%. Cliff, suffering just like the materials, only more so. Boeing, going from bad to worse. Oil, portraying weakness for the rest of the energy sector, negating the last 30 days of brutal gains, now all the way back to 26. Apple, minus 6.7%. Here's an opportunity to buy quality on sale. I think hedge funds and pension funds are going to love being able to buy this below the Bollinger Band mean. What's your real risk? Is it going to come down and negate all of this stuff? That's the next support level. So if you can stand a 20% risk, why not? Put a quarter of the position here. If it comes down here, buy another quarter, buy a third quarter. You get the average price of the long-term fair value. Sure. The FANGs got brutalized, every one of the biggies. Devon Energy, like the other mid-caps, just got slaughtered. This was actually a really nice trader today. Right from the open with the hybrid frog, you sell the hybrid frog, and then you buy the supported spring crossing. You get two nice directional trades, and a third one out of the Z3 pinch. In the battle of the triple techs, one was down 13.3, one was down 14.5, and then the big deal of the day, Tesla coming back to reality here. So all the gains of the last 30 days are gone. Long-term fair value at 300, and all the guys that were loving it at 500 are thinking hard about it at 320, which is a 36% sell-off from the guys that bought it up here at the open. There's your trade box. I'm ready to buy it tomorrow if it breaks north of about 335 with a target back into Bollinger Band mean, then the middle of the range. So that's our speed run. Lots of opportunities tomorrow. Wet your whistle, sharpen your knives. Here we go.